Hello, hello, hello. My name is Jason Allen. I'm a realtor based in Palm Springs, California. And once a week, I focus on an area in the desert that I do most of my business. Today, it's Cathedral City, California. And I'm going to bring up a chart. We're going to dive into the most recent market data and give you an idea of what we're doing over here. So the California Desert Association of Realtors and the Greater Palm Springs Association of Realtors prepares this report with combined data. So we get a very broad understanding of what transactions are going on in the market. And, we have this lovely environment here. And you can see this actually from Cathedral City. That is a view. So Cathedral City, for those that don't know, is just to the east of Palm Springs. This is the Interstate 10. You can see the 10 down here. And that comes from LA over this way and then heads all the way out to Arizona on that side. And I focus on Palm Springs, Cathedral City, Ranch Mirage, and Palm Desert. So I do a report for each of those cities throughout the month. There are 5 weeks in the month. I will do an overall market analysis. And just for clarity, I do business in other cities. I just don't do most of my business in the other cities. So we'll start with the sales recovery chart. And there are a few things that I always like to point out. The first is we look at the overall Coachella Valley. That is this entire area, including Desert Hot Springs up here. And then individual charts will focus on break things down by city. And then the two ways we break the data down is we use average and we use median. Average is taking all of the numbers in that category, adding them up and dividing them by the number of items in the category. And then median is looking at the middle number and then establishing that half happened above and half happened below. You'll see that and it'll make more sense as I talk about the specific numbers. With respect to the overall sales chart, what we do is we establish this is the baseline. And going back to January of 2020 and then looking at January of 25, that's the projection. You can see where COVID had us significantly above our normal sales. And at this moment in the last year plus, we have been under our normal. Markets tend to swing. This isn't actually that surprising. We're certainly not lower than we were before COVID. And I don't know that we'll ever get quite that high above normal activity again, not in my lifetime. And I make this report available by download. So check below. You can then read all about how it's organized. So with respect to overall Coachella Valley, the median detached home prices, and we're going to break some things into detached and some things into attached. Detached might be on fee simple, land you own, or Indian tribal land, land you lease. It might be in an HOA or not in an HOA. And you can see in this particular case, and we chart this all the way back to January of 03. So this would be when the run up, Great Recession, and the gradual incline. On a micro level, we are lower today than we were a few months ago. However, if you look at the overall trend, it's at a 5.5% growth. Your stock portfolio should grow at 8%, housing at 3%. We have beat the average. So when you buy a home, think of it as a long-term investment, not something you're necessarily going to flip or quickly turn. Not in this market, and not most people. That's a business. That's a completely different operation. I've helped people do that, but that's not what most people do. With respect to the attached, again, this is your condominiums, townhomes, patio homes that have at least one shared wall. Typically, these are within a community, an HOA association, maybe lease land, maybe land you own, fee simple, or on within a gated community or not a gated community. We have both, and that's all of these again across the entire Coachella Valley. Same thing. We're showing a 4.5% growth over time, and we're pegging this to the median. So again, that number right in the middle is what we're using as a benchmark, and then looking at all the data going back to 2003 to peg that. And you can see we are, again, down at the moment. Very recently, we were at a high water mark, and that wasn't that long ago. That was January of 24. So, these things are a little volatile. You see, we've had these peaks and valleys, but the overall trend is always higher. Um, Coming down here. Now, we're going to focus on Cathedral City today. And now we're looking at the averages. So again, the average is taking the total number, adding them all up, and then dividing that total number by the number that we started with. So if it's 100 homes that sold, we add up all the sales costs or sales prices and then divide by 100 and come up with our average. And to do that, we say in the city of Cathedral City, average detached home size is about 1,800 square feet. Price per square foot, 303. Average price of the home. Now, compared to a year ago, that is down 3%. However, looking at all the way back to 11, 12, the very lowest in our most recent market or, historic market, homes are still at 256%. So long-term, houses remain a good investment. And then if we look at the attached homes, so these would be your condominiums, as they say, townhomes, 1,250 square feet, 267 price per square foot. And then you get into this, we're off by 1.5%. 1% on that line, 1%. But from the very lowest, you're still at 315% over the very lowest. Let's jump down to dollar sales. So this is a 3-month rolling average over the entire valley. Now, why do we use a 3-month average? We use a 3-month average to factor out a blip in the market where the market suddenly jumps or for some reason it falls off. Suddenly, stock market has some incident and nobody buys a house for 30 days or few people buy a house. We want to sort of screen out for that, put it into an aggregate. So you can see on an overall 3-month rolling average for detached and attached combined, we show fewer sales. That's all there is to it. That to me says a couple of things. Sellers, be prepared to be on the market longer. We're going to look at average days in a moment. And buyers recognize you have more choices right now. You have more flexibility in negotiating the deal you want. You're not getting 20% off the top in most cases, but you do have a better position. So for example, you might now get the seller to pay your buyer's broker agency fees, or you may get a timetable that you need in terms of getting into the house. And the flip side is you might now be negotiating with the seller to give them a little time in the house as a way to bring the price down a little bit better. But those are all negotiating strategies. This point is simply to say buyers have more options, sellers have fewer, basically. And then the detached, attached, and total sales on a 12-month average is a bit more stable. So this longer trajectory shows that we're not significantly off from where we were a year ago. We took our greatest decline in that year after COVID more or less felt resolved. COVID was this odd thing where everything got pushed up, but now we're sort of leveling off. Here it appears more dramatic on a 3-month average. And for the 12-month average, it looks a lot more stable. And that makes sense when you start looking at the prices and what's happening with prices. So 3-month average of total volume of sales in Cathedral City, we are off. We've sold about 20% fewer houses. And that's in relationship to the number of homes that have also come on the market. But on a whole, how many houses do we sell in September of this year as compared to previous window? So we have sold fewer houses, no question. There are also more houses available to be sold. Sales by price bracket. So I've circled these because, and even a little bit into the sevens, that's generally what the price point is like in Cathedral City. There are a few that are, there are some that are under 300, but you're mostly focused on a $300,000 to a $700,000 price point for houses. And then up on the Cove, in a couple of gated communities, there are some much higher priced houses, but by and large, this is where you're going to be purchasing. And with that in mind, it is a an excellent alternative market if you are price sensitive when looking in Palm Springs. Cathedral City's 5 to 10 minutes away from downtown Palm Springs, depending on where you are in Cathedral City, maybe 10 to 15 if we want to round up in the season. So not a bad alternative. And you can get a lot more for your money at a $400,000 or $500,000 price point. This is simply saying that sales by price bracket, it's taking this, September of this year compared to September of last year, and now breaking it down into price points. Interestingly, in the 6 to 6.99 category, no change whatsoever. In the 5 to 5.99, less than 10% change. Same with the 7 to 7.99, less, about a 10% change or a little less. So sales in specific price brackets remain strong. When you aggregate everything and you pull in things like in this price point and this price point, it appears as if our sales are off dramatically, and they're not really. That's not what we're seeing. There's a quick chart of dollar value. If we take the entire valley and add up everything that's been sold, yeah, we're down. I mean, it's consistent across the board. And then dollar sales by city. So it's this chart broken into cities. You can see the Cathedral City is again about 20% off where it was a year ago. And that's consistent with the volume of houses in addition to the whole dollar value. And then dollar sales by price bracket. Again, that 6 to 6.99, same. The 7 to 7.99, close. Like prices have not dramatically fallen off. They have softened, don't get me wrong, but they haven't fallen off a cliff. And then if we look at all home inventory, you can see, and I can move this, great. You can see that we simply have fewer houses available on aggregate as compared to pre-COVID. And you can see before COVID, they were starting to go up. That's right in our season. We typically see more inventory come on November, December, January, more so in January because we're now past the holidays. People are still in town. They're anticipating perhaps a rental for the next year. And gee whiz, why don't we just buy a house or a condo? So our inventory is up a little bit, but still not where it was pre-COVID. And when we were pre-COVID, we had basically a balanced market. And that's a 6-month inventory. I'll show the inventory numbers. We go lower. And this is inventory by city. So a year ago, 122 a year ago was 122 units. Today it's 187. So you see this big increase in inventory, but it's not this kind of an increase. And then if you look across the board, unless you go down to Coachella, which has very few sales to begin with, they have the same inventory. But you can see in Palm Springs, we have significantly more, Palm Desert significantly more, Indio, La Quinta, Rancho Mirage, and Cathedral City, Desert Hot Springs. Not so much Indian Wells, Bermuda Dunes, not so significant. And then inventory by price bracket. So this is taking this aggregate that I just showed you and slicing it across the entire valley, but looking at price bracket. So if you're in the $500,000 to $600,000 price bracket, you can see that you've got more to choose from compared to a year ago. And then months of sale ratio essentially is like how long would it take us to absorb all of the inventory throughout the entire valley if no new inventory came on? About 4 months. And that's purely theoretical. I mean, right around COVID, there was, I think, one day when I saw no new listings come on, and then another day when I saw no sales occur. So it happens, but there's COVID. That's an anomaly. We're not likely to see that happen again in our life. And then if we go months of sales by city, so we have about, in Cathedral City, almost 5 months of inventory. A year ago, there was 2.5 months. So you see, this is where I say buyers have more leverage. Sellers have to be more patient. Sellers are often waiting it out. They're going into that 30, 60, 90, 120-day window and getting a number closer to what they want if it's priced appropriately and the market simply hasn't responded. Months of sale by price bracket. So if you're in the lower priced properties, it's really only extra month. When you get up into um, the 7 to 8, almost 7 to 7.99 price point, you're talking about 2 months more. Likewise, as you go up in price, and even in the 600, right? So these are fewer sales in Cathedral City as compared to the more affordable prices, if you will. And then days on market, Coachella Valley overall, 49 days. That's an average. Excuse me, that's a median days on market. So half were above, half were below. I beg your pardon. And then if we go into median based on city, Cathedral City's median is 43 days. That means of the 100 and some odd houses that sold, half were above 43 days, half were below that. That is significantly more than a year ago today. Um, it's just the nature of the beast. I fully expect once we are past the election that we will see our sales start to increase gradually. I don't think it's going to be dramatic, though I was just talking to an agent that does a lot of business in San Diego and he's seeing multiple offers again. The difference between that market and this market is that we're half of our market is basically a second home. And if I have a choice, if I'm a prospective buyer, I have a choice between buying a second home and waiting. I'm going to opt to wait in an uncertain political or economic environment. And then these are median days on market by price bracket. So in the 4 to 500,000 valley wide, you can see identical to last year, a little bit higher here, significantly higher as you go into these higher price brackets. And then average price premium by discount. So if we look at the entire valley, we look at what the average discount is, you're talking about 2 to 3%. So where I go back to, you're not seeing these dramatic price differences when someone lists compared to what they actually sell it for. In Cathedral City, it's about 1.3%. I mean, we'll call it 1.5%. That's not thousands upon thousands upon thousands of dollars where you get to go in and offer half of what the owner wants, or on a $300,000 house you're talking about 1%, $3,000. Not a lot of money off of the top. But by the same token, that seller has already come on the market at a price point that is lower than it was, say, coming out of COVID or at COVID. And then if we look at average selling discount by price bracket, again, very informative. I mean, until you get over $2 million, are you in the 6%? That's dramatic. Why would someone sell at that? Why not simply lower their price by that much and attract more buyers? But be that as it may, that's a different conversation. And then there are a percentage of homes that are selling over. And those, as we factor as an average, on average, there are 13.8% houses that are selling over their asking price. Now, clearly, that means that's driving this number down, but you get the idea. So that's it. I'm going to stop there. I tried to go fast. You can always speed me up with your little gear down there in the YouTube window. And as I say, I will include this link below. And if you have any questions, don't hesitate to reach out or leave a comment below. Thank you and have a fantastic week. Bye now.